Friends, welcome back to Continues to Tick. If you're clicking on this video and you're here right now, I guess you still happen to be a dividend investor. I'm still around. I'm still here. So welcome. The markets, the economy, everything continues to be quite shaky. It's really hard to know how everything is going to move. Moving forward, today, it's hard to plan. But the one thing is, if you're a dividend investor, use your time. Leverage it. It's going to continue to pass. If there's no other message that you can get from this series, from my channel in general, is that for me, friends, I'm a big believer that you have to stay in the game. You have to leverage time. You have to use it. Start early, stay in the game, and good things will happen, especially if you took the time to build a good foundation in your portfolio early on to begin with. Literally, for me, friends, from the very beginning, when I first started becoming a dividend investor, my strategy has always been to never sell. From the very beginning up to now, I've sold very little of my portfolio in terms of the holdings that I have in it. I've only sold off some stock splits and things like that, some stock spin-offs, but I've never actually sold a position as of yet. And that has always been my strategy. Because my strategy is stay in the game. Just stay in it. Hold on. No matter how odd it gets. As a dividend investor, you have to use this time. That is key. You can try to do it on the short term, but you might as well go be a growth investor. To be a dividend investor means you have to use this time. No matter how ugly or how pretty it gets, you got to use it. So for this month, friends, we're now in the month of August. Where does time go? I don't know. But speaking of time, it continues to pass. It continues to tick. So as always, friends, I'm going to go over a portfolio update. And with that, it'll include a couple things like me sharing with you how much I actually fund into my portfolio and how often. And if you've been here a while, you're going to see a lot of this stuff is still the same. But if you're new, welcome. But apart from telling you how much I fund my portfolio, I'm also going to go into my sector allocations and percentages. Once we get to the portfolio review. In there, I'll share with you some of my best and worst performers per sector. I'll also share with you the number of holdings I currently have, which also doesn't change. And then my current dividend portfolio's yield, that does slightly change. And then with that, I'll also share with you my expense ratio. And then of course, once you get past some of those things, I'm going to share with you once again, because I do this every single month and I think it's important. I think it's important for you to also be honest with yourself and do this with yourself as well. As share with yourself, for me, I'm going to share to you, but think of your short and long-term plans for the portfolio or just in general. What does it look like for your retirement? How far away is it? How realistic is that to happen on your current trajectory? I'm going to share those things with you, but I only do that every single month because I want it to spark that same conversation in you with yourself. You have to think of this often. Do it at least monthly. Look at the bigger picture. There's so many people that I've seen ahead of me, when I was younger, older adults, even people that are older than me right now. I'm 28. It was just my birthday on Wednesday. But I see people in their 40s and their 50s barely start to think of retirement. And I'm already thinking about it right now. But for them, friends, if you barely start to think about it, right when you're near retirement, getting close to it, you're already behind. There's no need to make life that much harder for yourself in the future. Think about it today. Think about it every single month. Think about it as you continue to move. That way you can plan. Leverage time, leverage opportunities, make it easier on yourself. Can't stress that enough. And as always, friends, with these monthly reviews, I'm going to tell you how much I currently now make in dividends with my current portfolio size. It's always the fun part, isn't it? And then for every single video that I make now, I choose a topic to discuss early on in the video, but right before we go into the portfolio review, and this one in particular, friends, I'm going to talk about how I continue to navigate this shaky economy. And maybe you can learn a couple things, maybe there's some things you can relate to, maybe some things you agree or disagree with, but the beauty, friends, the beauty about being a dividend investor is that this strategy takes time. It takes time. And because it takes time, you have that time to then make some adjustments here and there, or just practice having the mindset, formulating this very strong mindset that no matter what happens in the economy, you continue to move, you continue to stick to your fundamentals, you continue to keep that vision alive. And through this process, friends, you also realize you got to be honest. You got to be honest, and sometimes you have to adjust and pivot your goal, some of the things you're doing. So let's talk about it. So for this first one, friends, fundamentals. What do I mean by this? I mean that the basics matter. The basics matter. Well, what are fundamentals? One, starting is always one of the first basic fundamentals. There's a lot of people that just think about starting a dividend portfolio and they never actually pull the trigger to do it. Well, first, once you get that out the way and you're actually a dividend investor now, the fundamental, friends, is find a funding amount that you're comfortable with and then a frequency. For me, just to share with you now, I invest $100 every single week right now into my dividend portfolio. I have it done weekly. It's all on automatic on M1 Finance, which is the broker that I use for my dividend portfolio. I enjoy them. You can look into them. There's so many others as well. But the point is, friends, $100 is a funding amount. Weekly is the frequency. Set it to automatic. Those are the fundamentals. Even if you zoom out from there, another fundamental. Making sure that you have income always coming in. Take a look at your job security. What does that look like? Is there any shakiness in your job security? Because if your faucet runs out of water, you're not going to be able to water this tree, this plant, for it to grow. So zooming out from there, friends, how is it that you're doing? A fundamental in yourself. Are you comfortable with yourself? Because if you're not doing good, you won't be able to go into work, make money to then also fund into your dividend portfolio. All these things are fundamentals. All these things stack upon each other. You got to focus at the root, which is yourself. Make sure you're doing good. You can find a personal development journey, find things that work for you, continue to grow yourself. And if you're good, you can go into work, you can have good job security, you can have some good income coming in, right? And then you can use that income and throw it into whatever pile you want to throw it into, and hopefully one of them is a dividend investing portfolio. Those are the fundamentals. Those are the basics. That is what I mean. Think about it, friends. You have to look at life in this way. You must. Because if not, time's going to pass. You're going to get close to retirement age, and you're then barely going to think about all this stuff. And you're going to stress yourself out. Life is going to be way harder than it should be because you would have never thought about any of this. If you're only having a 401k from your employer, you're doing things wrong. If you don't have any investments by the time you even get close to maybe a decade before retirement, you've done things wrong, friends, and you're going to stress yourself out. So think about it today. And I know a lot of you do because you're here watching videos like this. You guys like time. That is the whole premise of this channel here, this dividend investing channel, is time. This second one, friends, vision is a must. And this ties in with, you have to think about it. And thinking of all these fundamentals, you now have to kind of attach a plan to it. You have to have this vision of how it's going to look in the process to get to that end goal. We know what the end goal looks like. We want to at least have a pretty substantial dividend portfolio. You can even zoom out from there a little bit. What does that look like? Well, we know what our retirement wants to look like. Do you want a FIRE? Do you want a fat FIRE? What type of lifestyle do you want to live? At what age do you want to retire? These are questions you got to ask yourself. That is what the vision looks like. For me, friends, I have a vision and it's very clear. I want to retire by the age of 50 to 52. And this is only because I'm working for the state. I mean, realistically, that is my earliest retirement age when I can actually start to pull a pension, right? So that's why that vision is quite clear, between 50 to 52. And I always say I want to live a life that's better than the one I currently live in right now. I want to get to a point in my older age, friends, where I don't have to worry about finances. I don't want to worry about money because I shouldn't have to worry about money anymore, because I've spent 2-3 decades building up a nest egg. And if when I get to the end point when I'm actually utilizing this nest egg, which is the money, and I still have to worry about how I built it, I did something wrong. Something was flawed on this path. So my point is, for me, I want to retire at a certain age and I want to live a certain way. That is my vision. Now, I have to keep that vision from the beginning, from today, as I continue to move amongst time. And it doesn't matter if the economy is shaky. It shouldn't matter, because every day when I wake up, I think about that end goal. I see that on the horizon in my life. And then if I attach that vision with the fundamentals, now I have a plan. And the plan is what helps you stay on the trajectory that you need to get to that outcome that you desire, that you dream, that you want, that you could obtain. That is how you have to move in this life. Stick to your fundamentals and have a vision the whole entire time. And this goes into the third one, friends, because that vision can change. This is where you have to be honest. You have to be honest with yourself. This is very important because the fundamentals cannot change, but the vision might. And if the vision changes, well, then the fundamentals are going to have to change. Things happen in this life, friends. The version of yourself that you are today is not going to be the same version you were last week or a year ago or 5 years ago or 5 years into the future. Life changes and you have to remain flexible, adaptable, able to pivot and make adjustments. You have to, but you have to be honest in this process. Things will change. Maybe you have to work an additional 5 years. Maybe you have to change your funding schedule because now you have a new addition to a beautiful family, right? Or someone in your family got sick and you have to be there more for them financially. Or for yourself, maybe you get injured, you can't go into work, right? As we spoke about in the fundamentals, we have to be good. And if we're not good, it's hard to have job security or income coming in. If something in here takes a hit, sometimes we have to be honest and readjust. Maybe we get to that retirement age and we realize I can't retire at 52 or 50, or I can't retire in the fat fire, or I can't retire with more money than I thought I was going to have. Be honest with yourself along the way and utilize these monthly reminders that I do. Maybe do it also yourself as I do them with myself, and just reflect on your life. See how your trajectory looks and recognize that sometimes you have to make adjustments. For me, friends, I just recently finished my master's program, which I'm very happy about. But during this process of, paying more than $1,000 every single month into this master's program because I was paying out of pocket, and with the goal of trying to save up for real estate, I used to invest $500 into this dividend portfolio every single week. Now I'm investing $100 every single week, which I've been doing for over a year now, like a year and 7 months plus, which is about the same time frame that I was in my master's program. But my point to this, friends, is I had to make an adjustment. I had to be honest with myself. I had to be honest. So don't be scared to be flexible. So here we are as always, friends, in the Jesse's cash flow portfolio. Now that it's time for the portfolio review. And as you can see, the economy has been a little shaky. I mean, we were around 72,000, I think, a month ago. Now we're at 70,000. We're still in the green, which is good, but, a little bit on a downtrend. And as a dividend investor, friends, the beauty of it, and I say it from time to time, but sometimes I need to remind myself, is as a dividend investor, growth is great. That's a cherry on top. But the thing you're looking for are the dividend payouts. If there's a slight downtrend, don't worry so much, because the thing you're looking for are the companies that you're holding still paying dividends. And if they're blue chip companies, solid in companies, aristocrats, they likely are still continuing to pay a dividend and have very solid balance sheets. So those are the things you have to focus on, is the income, right? You're doing this for income. So remind yourself of that. But here we are, friends, still in the green, $8,737, which in total equates to a 23% return. And if you look a little closer here, friends, from market gain, it's $4,800, and from earned dividends, it's $3,800. And this is all time, but that is what this is this is all time. But that is what this whole thing is about, And that's the best sight to see right there when you're a dividend investor. And for those that are curious, friends, I started this portfolio on July 20th of the year 2020, and I do drip, by the way. Everything that I make here in dividends, I continue to reinvest and funnel back into the portfolio, which M1 Finance does a really neat job of doing. I mean, it's very easy. When I first started with them, they were very dividend friendly, and I've just kind of stuck with them from the beginning. So nothing but good things to say. But now kind of going into some of these sectors here, I have it broken down into tech, real estate, consumer staples, index fund, have an ETF, utilities, financials, I have industrials, healthcare, communications, energy, materials, and consumer discretionary. And let's see some of the best performers. So tech continues to be the best performer with 157% return. And if we click on it just to show you, I already know a good chunk is going to be Nvidia, just kicking, still 473%. Just I know for my actual target and my target, there's a pretty substantial gap here now. But the thing is, I really try not to sell any chunks of my portfolio if I don't have to. I'm sure a smart thing would be to take some of that out and divest into some other companies and other holdings. But Nvidia, they're kind of getting started. It's hard to know exactly where they're going to go. So for me personally, I'd rather not even tinker with it. I'll just hold steady and I'll live with whatever happens. It depends how you want to play it. I'm a big believer in AI, and AI is kind of on the forefront right now. So, they're going real hot right now because of that. And AI is barely here. So we'll see. We will see. And as far as the next one, friends, you got energy here in second place. These gas companies, consumer discretionary financials. And let's just see out of curiosity which ones are in the red. So utilities, I guess it's expected. Real estate, of course. Let's just click on it, for example. Down 8% as a sector in my portfolio. And a lot of it is O. And then AMT continues to be a little bit of a slumper here. But, I continue to hold it because, being diversified and everything, you don't want all your cookies in one basket. Maybe this dog will also have its day. It's hard to know. It's hard to predict. So for me, like I said, I'm still in the green, but we continue to move. Everybody has to start to make their own decisions as they go on their dividend investing journey. There's no right or wrong. There's so many different ways to play it. This is just one example on how I play it. And if you're curious, because I know I don't dive into each sector and show you each sector's performance, there's a link in my description box down below. You can click on that link. It'll take you to M1 Finance and my shareable pie. And you can, look at that at your own leisure. There's no rush. And you can dive a little bit deeper into see my exact holdings and things like that. I know when I first started my dividend portfolio, those were always things that helped me, was just taking a look and a peek at how other people were investing or creating their dividend portfolios. It gave me a good idea. I didn't ultimately copy any particular portfolio that I saw, but sometimes it's nice to see examples. It gives you a picture. At least that's how my mind works. And as far as some of the activity here, friends, I'll just give you some proof here. Semper actually had a stock split recently. But see, I do deposit $100 every single week. As you can see here, there's a couple of them. And everything in the green here is a dividend payout. Here's $8 by O, which was in the red, by the way, right? But see, an example perfectly. They continue to pay the dividend. So even though they're in the red, they're having, somewhat of a downtrend because the housing market's probably the shakiest right now in the economy. They still pay me $8 in dividends. And then you got Procter & Gamble, $8, Alliant Energy, $6, you got JD, $4, and so on and so forth. Here's a Verizon, $12, and a AT&T, $13. So these are just examples, friends. I continue to drip, and this is just evidence, just to show you an example that try to be transparent, I guess, ultimately, that I'm a dividend investor and I'm in this with you guys as well. So let's show you a little bit more data still of the portfolio. And we'll go into Mike Jesse's cash flow. And this is the data, friends. So this is on a 5-year. It said it'd be in the red and so on. And it works sometimes. Say a year. No year. It won't do it. Just wants to show me in the red. But here's some of the data, friends. I hold 51 holdings. I've had a lot of people talk to me about this and say their opinions, and that's totally fair and fine. I've been rocking and rolling with 51 Holdings since the very beginning, and as you can see, I'm still in the green, and that has been my personal strategy from the beginning, and I'm just sticking to it. I always say it's like comparing a young kid, a young boy, buying his, pair of shoes and one or two sizes like bigger, right? Or buying a pair of shoes that he's going to use when he's older. Same idea for me in this portfolio and why I hold 51 Holdings. Another reason is I just enjoy, managing my own portfolio. Sure, I can get just like one or two ETFs and do it that way, but there's a part of me that gets a lot of joy by looking at my portfolio on the weekly basis or on the bi-weekly basis and just really taking a look. I literally don't change anything, but it's just kind of, there's something about pride in there, some enjoyment that I get from managing my own portfolio. Maybe some of you guys can relate to that, but I know some people continue to tell me about 51 Holdings, and that's totally fine. Totally fair to say, totally fair to ask. And as far as my dividend yield, friends, it's 3.33%, which is right where I want it. And then my expense ratio is very low, 0.01%, which is the benefit to managing your own portfolio. So one thing to keep in mind. And friends, just to share with you some of the long and short-term goals. I guess just to start with the short-term goal for this portfolio. For me, I'm continuing to funnel $100 every single week. And that is on automatic. I do that every single week regardless. There has not been a single week that I've missed. And I think since the beginning of this portfolio practically. I've been doing it every single week and just stayed consistent with that. And I think this staircase graph can kind of show you that I've just been consistent. And this is the byproduct of time and consistency, consistently investing and funding, watering your portfolio. This is the byproduct of it. So over time, it does exponentially see a benefit. And that's pretty much my overall short term. My longer term goal is I am trying to buy real estate in about 3 years or so. I always say that. Now I'm 28. But I still want to buy, hopefully, my first rental property, by 30 or at the age of 30. And then once I buy my first property, I'll kind of reevaluate. I'm thinking once I get my first property in, I'll start to fund this portfolio more aggressively like I used to before. Maybe I'll go back to $500 every single week, or maybe I'll dive deeper into real estate. It's hard to know. But regardless, this is one of my foundational financial pillars, and I'm going to continue this moving forward until the day I retire. So I'll be here so often as time continues to tick. So hopefully you guys stick around for that entire ride, because I'm not planning to go anywhere anytime soon. These videos are very fun for me to make, and it's almost just like a reevaluation period where I really get to sit back and reevaluate my plans, my financial goals, and I get to share them with you as well, just to document the journey over time. And then now getting to the part that a lot of us like to look forward to. So let me set my screen here, and that's to see how much this dividend portfolio is paying me in dividends. So as you can see here, friends, we're at $70,623.67, so practically the same. I don't know why sometimes it hits it just right on the mark and other times it doesn't, but we're very, very close today. It's practically the same, which is pretty neat. I feel like I try to do that every time, but it doesn't happen every time. And as far as the annual dividend income, friends, we'll make this short and sweet. We get $2,209.86 currently. It continues to go up every single month that I show this. My monthly is $184.16. My daily, it's $6, and that's increasing, which is pretty neat. And then my yield is 3.13%. And my yield is 3.13%, which is a little different from M1 Finance, but anywhere between that one and this one, I'm totally fine with. I will take it. No issues there. And that's going to be it, friends. We've made it through another video here, another monthly review. This was for August. We'll see you here soon in September. And if you made it to this part of the video, friends, I do have some news. In September, I will be in Greece, but I'll still continue to upload. My next upload will be literally the week that I'm heading for Greece, so there's no issues there, but the following one, I may have to record it when I am in Greece. So be on the lookout. I may share some nice little video footages or just some type of entertaining something just to show you of my time in Greece. I'll likely though just show you a little preview here, and then I'll actually put on my second channel, which, if you guys haven't known, it's called Continues to Improve. We just passed 100 subs on that one, which is pretty awesome. It's just me speaking about personal development, a little bit more of my journey. If you guys are wondering where's Jesse, most of the time, he only uploads every 2 weeks. I upload multiple times a week on my Continues to Improve second channel. And a lot of it, friends, is just me trying to share some videos that have helped me, continue to become the man that I'm becoming. I'm nowhere near a final product or a finished product as a person, but that's the whole point, is that I'm continuing to grow. I'm continuing to improve. But as always, friends, thank you so much for joining. I'll see you guys on the next video. Don't stop investing, stay in the game, stay consistent, and continue to leverage your time. This will be worth it, friends. Don't stop here. You already started. You're already thinking about this. You have to see it through. So until the next one, friends, take care.